JPMorgan Chase is now the owner of San Francisco-based First Republic Bank after its failure. It is the second largest bank failure in U.S. history and third major banking failure in less than 2 months. KTVU's Tom Baker joins us now live from First Republic's Walnut Creek branch with the details of the deal, what experts are saying, and reaction from customers. Tom.
Well, I'll tell you, it's so business as usual. It's like really it never even happened. Terry Legler's First Republic Bank ATM withdrawal went off flawlessly Monday.
Hopefully its service don't change. That's the big thing, and they remain a small operated bank.
JPMorgan is paying some $208 billion for most First Republic assets and assumes $122 billion in liabilities, of which $92 billion are deposits. Even depositors who exceed the $250,000 federal deposit insurance limit are fully protected.
Nobody as a depositor has lost a nickel.
I would hope that, they increase the limits, I guess.
As a part of the deal, JPMorgan is getting a $50 billion 5-year loan from the FDIC. The complex deal will also see JPMorgan pay $10.6 billion to the Federal Deposit Insurance Corporation, which is paying $13 billion to seize, stabilize, and sell the bank to JPMorgan.
This bank, as the biggest bank, is the least likely to fail.
That also gives confidence to banks to do banking without fear of depositor panic.
We have really quelled the fear and the runs on some of these banks.
A government takeover would have been far more expensive.
So in that sense, I think the government has done a really good job in quelling the burgeoning fear that we had a month ago.
The biggest losers are the shareholders.
So this is bad for shareholders, obviously, but then again, shareholders knew or had to know what they were getting into investing in First Republic.
Question is, will JPMorgan continue to operate First Republic under its own name, a very popular and respected name? It's important to note that JPMorgan actually does business under 7 different names.
I hope they do remain as First Republic Bank. Definitely their customer service is a lot better. They're more friendly, I think.
But the doubts remain. The KTVU NASDAQ Regional Banking Index, that's a basket of still solvent, still operating banks similar to those in size that of those who have failed, has now dropped 25% since early March, when the fate of the now failed Silicon Valley Bank became a matter of concern. Even though these banks are operating and they're healthy, they're down 25% as a group. Reporting live, Tom Baker, KTVU, Fox 2 News.
So, Tom, do you think we've seen the worst of the banking situation industry, or do you think more of this type of thing is to come?
I think these banks are going to be looked at a lot more carefully now, and I think there are going to be a lot of rules that were relaxed to them during the last presidential administration, and this administration is going to have to try to tighten them up. The other thing that's really scary, and there's no way to put too fine a point on this, all this commercial real estate that's not being occupied because people are working remotely or there have been layoffs and all of that stuff, that represents a $22 trillion investment on the part of banks of all sizes. Should we have any significant number of failures, we're going to have a very, very large problem. And it appears as though they're looking at this problem, but I don't know if they have a solution to it because the buildings simply are not worth what they were worth 2 or 3 years ago.
All right. Tom Baker reporting live for us tonight in Walnut Creek. Tom, thanks.